Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Thursday, May the 2nd, 2013. We'll be looking at some European charts today and kind of explain why it's important to the U.S. markets, so that we'll be connecting the two. If you watched yesterday's video on the U.S. markets, then you know we were expecting the ECB to come out and make some statement regarding their interest rate, and we expected they would probably lower that interest rate, and it would give you a boost for the day, maybe even two, but it won't be sustainable. It's over. You're going to sell this news. It's not important. Here's why. You had a massive breakdown going on for a while. We had failed at a high point, started going lower, and started breaking through very easily, tearing through previous support levels, just one after another, and making a new low. At this time period over here, we had, let me get the right tool. During this time period right here, we had the G20 meeting when everybody got together and they say, hey, guess what? We need to do something about the European issue there. We're not seeing any confidence. So we need to restore confidence. What are they talking about? Well, we need to reverse the little sell-off that we're seeing here. So you can see the market turn around. People are anticipating that they're going to do something or say something that's going to cause markets to rally. So we start seeing price increase, and they start talking about, well, maybe they'll go ahead and lower their interest rate. Well, they do that, and that's exactly what was expected. So all of this right here was already priced in. All this move here was anticipating that announcement. Now that announcement has hit, and then you got exactly what you expected. You weren't surprised to the upside. You had already priced in this range, right? You said, okay, this is what we expect before the announcement. And the next day you sold off a little bit. It's kind of basically hovering at this level, and then we gap down in case maybe they won't say anything, and then sure enough they say something, they come up here and we bounce back. All we're doing is moving sideways right here at this range. That's it. The game is over. The question you have to ask yourself when it comes to that interest rate cut, does it change anything at all? You had before, when you had the European crisis first start, we actually looked around there and said, okay, this is not good, let's lower the interest rate. So they did. And that gave a boost to the markets because it was a substantial lowering. You lowered from 4 or 5% down to 0.5%. That was a substantial move. Then you adjusted a little bit higher, and just to give yourself a little more room there, and now you come out and you do the exact same thing. Why? Because it's not working. You're not actually changing the environment. You postpone the crash. You've propped them up for a little while, but eventually what comes around is the fact that the fundamentals are still not there, and so you start to see the economy starting to collapse, and so they're coming in here trying to find some way to prop it back up again. However, in the U.S. we have options they don't really have in Europe. In the U.S., you know, the Fed's printing money like it's nobody's business. Japan, we're seeing the same thing. And over there in Europe, you're not seeing that. And the reason for that is that they are busy doing something else. And that's propping up peripheral countries that have been lying and got really bad books and lots of debt problems and so forth and so on. So what we have is they're just dumping money into the worst possible investments you could never imagine. We're just going to burn through a great deal of cash, and going to have to. Only way to solve it is to do this whole austerity message. So what ends up happening is the economy tanks because they have to let it in order to solve their problem. So it's just this big game where they're trying to prop up something that they can't keep up. In any event, the main point of the story here, I would sell this. Looking now at the German DAX composite, it's supposed to be one of the strongest European partners over there, financially speaking, and the move that you've seen here, nice little move here, even take out the high. So we're still well away from the high here. No change in trend whatsoever. You still have this downtrend going on. It's been going on for a while. You came down here. You took out the previous lows, so it's very important we could do that. You bounce back up here now. It doesn't change anything. You still have lower series of lows, low point here, lower series of highs, high point here, lower series of high here. What do you think is going to happen? You're in a downtrend. You sell the bounces. That's all you do. Looking at the chart real quick, you can see that we have a couple of different things to point out. You can see some sell pressure off of today's activity. That again confirms what I was telling you yesterday, that this is going to be a sell the news event. You get the bounce to the upside, just on the yes, we're going to give you the anticipated rate cut, and then you get that, and people just start selling. That's immediately what happens, because that's it. This is already played in. Now you look at the past 2 days where you've seen this close here. Following day, we got higher close and a higher close. Then you look at the same time period on the ultimate oscillator, decrease in momentum here. Here, you can see we're just selling off here. There's nothing new here. So with all the conditions you have here showing that you're topping, that there's really nothing here that tells me to do anything other than say this is the top in the European market. It's not being propped up by their Fed. So it's important that you sell it, but then you think about it, you say, okay, wait a minute, they don't have the same effect. In the U.S., people keep saying, well, just don't fight the Fed, just go buy, just go buy. They're retarded, don't listen to them. The reality is, Europe's the problem. They're not being propped up by the Fed, so they're breaking down like you're seeing here and here, and then when they start to go lower and lower, it drags everybody else down. It's basically the Great Depression all over again. It's just a little bit different, but the same events will happen. One other chart, a little bit off the peripheral there, that I'm interested in would be the India Bombay Stock Exchange, the BSE. I'm watching this because it's had a massive bounce off of a low. Okay, you can see the lows are obviously lower. A massive bounce here, and we saw a little sell signal here. We didn't get confirmation. Remember, if it's a black arrow, it means if we get a lower low the next day, then I'd sell. If it doesn't, then I won't. And so if she bounces, continues to move to the upside, all I'm doing here is watching for another sell signal, something like this, a nice shooting star signal with confirmation the next day. That'd be great. That's perfect. And with this overextension to the upside, that's exactly what makes sense to me. Also, take a look at the high points here, high close here, higher close here. You see them trending up, same time period on the ultimate oscillator, high close here on the ultimate oscillator, and then we're just trending down here. We're forming a bearish divergence, also telling us to look for a top in this formation. You don't short as soon as you see a bearish divergence. You wait for it to start to break down, then you get involved. Look for something like this, nice little sell signal again. This is a great short opportunity, but you have to be patient and wait for it. If you just think markets go up, therefore I must buy, you're going to get burned, because this was up market. You got burned here, same thing here, same thing. What do you think is going to happen here? Quick glance here at the London Financial Times Index. Nothing here to report that's new. We still have the same conditions, same sell signals. We are consolidating here a bit, kind of moving sideways, which could later form into an opportunity to take another move at a high, but that would be it. You would have run that course. You would have nothing new to continue to run higher on. I don't really think you've got the steam to do that anyway. Over here you were hitting a wall, hitting a ceiling, and this going on for a little while, and then you got this big boost, and then we come back down and say, no, really, we're just kidding. We really can't do that. We just come back down here, come back to the same basic level here, and we're saying, no, okay, we're just playing at this level. This is really just the ceiling here. And when you jump up above that, it's a great sell opportunity because you're trading above that 50-period moving average. That's what you're looking for when you start breaking down. You're breaking down because you're taking out low points. Okay, so all we're doing here is continuing to watch this thing roll over. In effect, it doesn't happen in a single day. People keep arguing, well, you're wrong. It's not doing it. It is doing it. It just takes time. It is doing it because you can say that if you look at the low points of this one to this one, or this one to this one, you are taking out lows. You cannot do that unless sell pressure is increasing and buy pressure is growing weaker. That's the only way those two things can happen. So when you look at the chart and you're seeing lower lows and lower highs, in fact, you are rolling over whether you like it or not. If you've not been to the free website at perfectstockalert.com, it's right there. It's 100% free, and all we ask in return, what do we ask in return? Oh, that's right, refer a friend. God bless. Take care. See you in the next one. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.